Is now the right time to buy a home, or should you wait for lower mortgage rates in the US? This is the critical question facing many potential homeowners today. Buying a home is one of the biggest financial decisions you'll ever make. Understanding the current market dynamics is essential for making an informed choice. The current US housing market presents a unique dilemma: high home prices coupled with elevated mortgage rates. How do you navigate this challenge? We'll be looking at the trade-off between current home prices and future interest rates. It's a balance of price risk versus rate risk. Let's explore the arguments for buying a home sooner rather than waiting for potential rate drops. One of the biggest reasons to buy now is locking in the home's price and avoiding future price appreciation, which has historically been a significant factor in the US market. Starting your homeownership journey earlier allows you to begin building equity immediately, leveraging your payments toward long-term wealth. Remember that while current rates are high, they aren't permanent. You have the option to refinance your mortgage if and when interest rates fall in the future. Now, let's consider the perspective of waiting for mortgage rates to decline. Waiting for lower rates means securing a smaller monthly mortgage payment from the very beginning, making homeownership more immediately affordable. Lower interest rates increase your overall buying power, allowing you to afford a more expensive home or keep more money in your pocket over the loan's lifetime. However, waiting carries risks. If home prices continue to rise, the savings from lower rates might be offset by a higher purchase price and increased competition from other buyers. To help guide your decision, we need to look at current predictions for the US housing and mortgage markets. Market forecasts suggest that while rates may dip, significant drops may be gradual. Stay informed on the latest Federal Reserve policies and economic data. Home price trends are driven by inventory and demand. In many desirable areas, inventory remains low, which continues to put upward pressure on prices. Beyond market trends, your personal situation is the most important factor. First and foremost, assess your personal financial readiness and stability. Are you prepared for the commitment of a mortgage, regardless of the interest rate? How long do you plan to own the home? If it's a long-term residence, the benefits of building equity sooner often outweigh the risks of a slightly higher initial rate. Real estate is intensely local. Conditions in high-demand metros may differ vastly from suburban or rural areas, influencing both price and inventory. So, what's the final takeaway on buying now versus waiting? Ultimately, your decision comes down to which risk you are more comfortable with: the rate risk of a higher monthly payment now, or the price risk of having to pay more for the house later. The best advice is always personalized. Consult a trusted financial advisor or a local real estate professional to tailor this analysis to your specific situation and market.